What's going on? We will give some time. Once I start the analysis, it's not going to make sense when people jump in a little bit late. I mean, it might make sense, but we'll just give people some time. I'm just going to browse and see what I notice, and then play around with some stuff. You can kind of just watch how I do it. It's sometimes it's just playing around. I just got to figure out where the levels are, and then we'll do a full walkthrough. It's interesting. You know, gold's interesting because we're so far separated from the initial trend, like extremely separated. You know, almost, you know, whatever percent that is. It's like 6 times 3,900 divided by 4,500. So 14%. It's about 14%. From here to here, that's quite a bit. We're starting to get some divergence here on gold, and this is on the daily. So because it's happening on the daily, it tends to hold a bit more weight. You just have to wait longer for it to play out. So I do think we get one more peak somewhere up here. I like to see, especially on the daily time frame, really higher time frames, I want to see 3 peaks. That shows a healthy area for reversal. So we're on the daily. We've got 2 peaks so far where we've continued to test the market at these highs. We are getting weaker on this last push. We were much weaker than we were on the first push. I want to see us hold this and then get one more breakup, which it looks like it's going to do. And then see some additional divergence, and then I would the next move up, depending on where it stops. Again, this is a daily time frame, so you may have to wait longer. It may be 5 days before we get up here. 46, 48, 46, 37. Just depends on how quickly we move. But up here is where I'd probably look for the good short, like from probably right here back down to maybe like 400 or 500 points. And so when we get into our analysis, we'll try to pinpoint where that area is. We'll try to figure out where the location is. But let's see here if there's anything else we notice. I do see a lot of good trends that have been formed and then held on pullbacks. So what we'll do is we'll go into the second layer of multi-confluence, which is using Fibonacci to pinpoint price movement areas and where we can look for additional confluence to the upside. So possibly in our mind, right? Because at this point right now, we're really just guessing. Right? You know, we've never been up here. So there's nothing you can do right now to guess where price is going to go before it reverses. There's absolutely nothing just from first glance. However, there are indicators that, and I like to call them layers because they give an additional view. So right now we obviously have an uptrend. This is our current view, right? We have this uptrend. We had the first pullback right here. Now we created a new uptrend right here. And if we break this high, this will probably continue up, and it could go up to this high at 45.92, or it could go up to 4,700, 4,800 before we see the reversal. I mean, we're not too far away. 150 points is not too far away. And so what you want to do is you want to start using predictive indicators that are based off mathematics. Mathematics is extremely important in trading, especially in price discovery, because there's nothing else to go off of. There must be a variable that you can go off of. There must be. But when there's no when we're in price discovery, the only other thing in play is just trends. I mean, really, like right now at this point, this looks like our resistance of this channel. So 46.30 or so. So we'll leave that there. I mean, when you're in price discovery, you've got to take what you can get. You can't guess. Guessing does not work. This can go anywhere at this point. So you have to use some of your the variables that are working and that are showing something. So this shows an obvious respect of a resistance channel on the upside. On the downside, we see something similar. So if let's say we turn this into a parallel channel. So that's why I saved the parallel tool here. I have the upside channel, and then I have the downside channel. So this is thesis number one. Thesis number one is we continue, we break up here, tap this one more time, get to about 46.15, 46.20-ish, depending on when we get there. And then we move back down and we just trade this channel for a while. That's very possible. And so what we'll do is we'll try to align some other things with this area based on mathematics. And what I mean by mathematics is indicators that use math to define important locations, which is the most important piece, important locations. So what we can do now is, now that we have this upside, we want to see if, well, first let's draw it better so we have kind of a direct level. Let's go to the hourly. Okay, that looks better. Okay, we want to try to get as close to the price as possible, the price area. You don't have to do this if you're just looking for general area to look for trades. But if I can like draw my line a little bit better, then I can try to time where I want to take the trade better versus having, 15, 20 point, drawdown because I may have drew my line a little bit wrong. So that's the upside. So I want to see if there's anything that aligns with this upside area from a fib perspective, right? We have this move up pullback. So first I want to draw my retracement, see where we held. Did we respect the fib level? And as you can see here, we respected the fib level. We respected the 50% fib level on this move up. So now what that tells me is that the extension is valid. The extension is valid because we held the first leg in a perfect 50% retracement. I mean, it's not, you guys, it's not just perfect. It's literally like better than perfect. This doesn't happen just because the market's moving and it's respecting mathematics. This is what it's doing. You just got to figure out where the start, the top, and the pullback is based off of where the trend started. That's the main thing. A lot of people will draw it wrong. They may draw it right here. They may draw it, but this is not a start of a trend. This is not a start of a trend this here. This trend was right here. It's invalid. This is just a bounce bar. It has nothing to do with trend. This is more a part of the previous trend than it is a part of the new trend. The new trend started right here. This was the start of the breakaway. This was the trend. So when you draw it here, you see that we have a perfect 50% respect, which now tells us that the extension is valid now. And I try to draw it at the tip. And so now we have our levels. So now we have upside areas where we want to spend our attention. Interestingly enough, the 7.86 is right at all-time high. So we want to keep this on the chart. This is important. Important area. And then we want to draw that parallel channel again to see where that lines up with possibly. Okay. Let's make sure it's this. So we also have the full 100% extension lined up pretty much exactly, depending on how you draw this, with the 4,608 100% extension level. So this now becomes a very important point to watch for a really good reversal scalp trade, whether you want to hold it intraday for an hour or 5 hours. But now this becomes a great point of interest for us, right? This is a very good point of interest. This trend line doesn't really mean anything. It just lines up there, but let's remove it. That was just to show something. So now this area right here, whenever we get here, right, because it is 120 points up, it could be a couple days, it could be January 15th we get right here. But I want to make sure that I remember this at all times. If the market starts breaking in a direction, and I'm wondering what's happening and where do I take a trade, now I can remind myself that, hey, this was part of my analysis. This thing is actually probably going to go up to the top of this channel where we had our 100% extension from this first leg of this uptrend it's creating. And so now you just feel more comfortable, and your ability to patiently wait, because you're like, no, I'm waiting for my trade, increases significantly. You just become more confident. And you also now have levels you can trade in between. What will happen very often is that price will bounce between fib levels before moving into the next fib level. Like, it doesn't just go straight into the fib level and then break one and then break two. It goes into it, depending on the time frame of the move. It goes into it, and then it moves around in it, and then it moves into the next level, right? So if you see right here, as this started, one bouncing in, right here bouncing in before it moves. So you can also scalp these levels. When I trade silver, I scalp levels all the time. And here, I'll show you, because there's probably quite a few from the end of last week. So take a look at this. Once we made a bottom and then we created a new trend, look at how price bounces at the resistances of all these. 74.5, that would have been a nice short. 76.255 would have been a decent short. I mean, $2. It doesn't look like a lot, but it's $2. Right here would have been another decent short. So as you just start realizing that market starts to move with fibs, it's not about whether or not it respects fibs. It always respects fibs. I'm telling you, like, I see it everywhere. It's whether or not you can identify the right location to draw your fibs, so that way you don't have a drawdown, and you feel more confident. Like, oh, I know how to draw my fibs. I know exactly where I need to put my trade. So back to gold. If you guys are watching gold, I would really be looking at a couple levels here. I'd be looking at this, which is the 78 point, hold on, there we go. So I'd be looking at this level right here, which is the 4566, which is the 78.6 level. We tend to typically hold on resistances on these levels as well too. So I'd be looking at that, especially with it being at all-time high, how we react there before we possibly make another move up. And then if that level breaks, then I'd be looking at this 100% here, right where we have alignment with our channel, our long-term channel that we're trading in. And this channel may be, I mean, this could just be this, but it's not. I think it's a channel. Sometimes you have like this, like kind of pennant forming, but these wicks are not very good. That's really what it is. So it's either that or that. So I'd keep both of those on there. But yeah, so that's my upside target. That's where I look for reversal trades there. It's the best. This is the strategy, and it's not just me using fibs. it's not just me using channels. It's not just me using supply and demand zones, which I'm sure over here we probably have some really good price separation. Yeah, like right here. We have some really good price separation as we move into this candle. So this area here now just becomes a more of a point of interest, but not because it's just a fib level, not because it's you know, just where the trend could finish at, or it's also because we have a really nice level right here that we held before, and this is what you have to look for. You just have to make sure that there's a couple different things that are telling different stories. Like when you think about things like MACD and moving averages and VWAP and all of these indicators, they're just stacking indicators that tell you the same thing. They don't really tell you anything that's really different. That doesn't mean don't use them. That just means that is just one layer of your probability. Increasing probability is the purpose of using indicators. So you want to layer mathematics, you want to layer supply and demand, you want to layer what moving averages does, which is tells strength, right? Strength of market. You want to layer channels and patterns. If you can layer, the more you can layer, the more bulletproof the trade. Like if you can get to 5 layers, like 5 things that align perfectly. And an example, and you'd be like, okay, well, what would 5 be, right? Fib levels, supply and demand zones, trend retests, channels, RSI, VWAP, MACD, whatever it is, right? So that's just 5 randomly, 5 completely different things that do completely different things. If you get 5 that align, those are the trades that you just go balls out and you're like, the market is working for me. I am not working for the market. Like, oh my gosh, everything is here. I see it all. Like it's just a perfect trade that like you have so much confidence it'll work out. That's the trade that you make $20,000, $25,000 on. If you only have 4 things that align, then that's probably something you probably go half size on. If there's 3 things aligned, that's when you can take a trade, but it's not a trade where you're going to go full size. You're gonna you're gonna know when to, like this right here, where only 2 things align. But up here we may have 3 things align. This is not a trade that I would step away and not watch. I would take this trade and I would watch it. I would want to see us bounce in between this level. But I'd also want to protect it in case we break all-time high and we get momentum. This is not a trade that I would let go. But getting to this level right here, right on the 100% fib level, right on the channel, like if this came right up to this level, right on the channel, if RSI started diverging, we had a retest of one of these trends right here like that. Like look at this trend that broke right here. If we retested that at the same time, oh my gosh, this is where you go balls deep. Like this is where you're like, this is why I'm here. You have to take that trade and you've got to go hard. 5 for 5, man. It's when I've seen 5 for 5 trades, and I've had a few. I can go back to the ones from this month where it hit the level like after hours, and I went bought 5 minis in, and I went to bed and woke up, and it was 20 grand trade. Oh my gosh, like it is. Like when you see those trades, you have to be like, this is why I'm here. Like, yeah, I'm here to control capital because there's not this many trades that are like this that I can see every day, right? Some trades are only 2, 3, oftentimes only 2 or 3 things stacking up. And those ones, yeah, be consistent, go low, like trade slow, get $150, $200 at a time. That's totally fine. Those stack up over time. But when you see a trade where 5 different things are aligning, and when I say different, it can't be MACD with RSI with a moving average. Like those are all lagging indicators. They're not telling us anything that hasn't already happened. right? They're saying the same thing to us. We've got to align structure with trends, with strength, with supply and demand, with fib. Like these are all 5 different things that tell you 5 different things. And the power of aligning 5 different things like that is that you now have more market participation. That's where you see enough people jumping in where you actually get the decent sized moves and you can scalp out of it. So that's my thing of this. So I just want to share that because if you can just turn your trading into doing an equation in your head real quick and then identifying whether or not it's a good trade, like that's all you have to do is just, okay, this is only one layer. Okay, now I'm going to move on to see if I can find a second layer. Now I'm going to move on to see if I can find a third layer. Now I'm going to move on to see if I can find a fourth layer. Now I'm going to move on to see if I can find a fifth layer. If I can't find a fifth layer and I'm at 4, that's still a freaking good trade. If I can't find 4 and I'm at 3, that's one I'd still take. Like there's still opportunity, but it's just different opportunity, different confidence levels. 1 or 2, those ones, 1, I would never take a trade. If only one thing is saying something, never take that trade. If there are 2 things that line up, you may turn that into where you scalp. Like, hey, I know this might bounce for at least 5 to 10 points, but I'm not staying in this trade and I'm getting out quickly because it only has 2 things lining up. I feel like I'm at that level where my brain is just an autopilot and it knows which trades I got to go quick on and which trades I can just hold. And it just computes it automatically as I'm aligning layers. It's like, oh, layer 4, this is what you're going to do here. 3 layers, this is what you're going to do here. So it's not just about knowing the layers, it's about knowing how you trade based off of which layer you're taking a trade on. That's really how you just become this universal trader, is that your brain computes, you know exactly what to do, and you do it, and then you stop. That's it. And then you move on to the next indicator that lines up. Yeah, let's do some silver, man. Okay, so again, do we have any dominant channel resistance? We have channel resistance here. So if this was going to look like a pattern, because I want to see if there's any overall larger pattern. Not on the weekly. Let's go to the daily. Don't really have much. I mean, we have this. This is probably the only thing that we have here on the daily. Like that. So this really is the only thing that I'm seeing right now as a larger time frame pattern. But it's can be very valid. So it's important to keep this here, because if we have things that align with this trend, if we start moving back down, we want to again do our analysis. Trend is always layer number 1. Trend just tells us where we should start looking for confluence. That's the thing that you guys have to understand. Trend does not tell you where to take the trade and what direction to take a trade. That's what people think. It doesn't. It just tells us to look at which areas we need to be focused on to align better entries with other things that stack up with that exact same location. So I would leave this here. If we get a pullback here, or if we go up here, I know that I'm going to look for possible bounces here and things to line up so I can take the trade back down to this, and then we can bounce through this. Who knows? So that's the 4 hour. So we also have this uptrend here. If you look right here, from here to here. Let's go to the 1 hour. So it looks like this was the trend. So if we draw a fib from here to here, do we get any respecting? So we don't have any respecting from where we drew it here. We don't really, I mean, we have some respecting here at 78.6. So what we need to figure out now is where the trend started. Did it start here, or did it start with the gap? Because it gapped right here. So let's draw the gap. Yeah, so this looks like where the trend started. And the reason being is because you see this area right here, which was the trend break and then retest. The retest validates the trend. The reason why we held right here is not because of anything up here. It's because there was a trend right here that was retesting. Trends get retested before separation. It just always happens. So this tells me that the trend started here. So if I draw this here and then I go here, then we held on this 78.6 level. So we could go up quite a bit. So when it's very rare that I see 78.6 levels hold to the bull side. So we get back here often, but normally once we get back to this, after a move up, it means that we're going to break back below and we're going to retest up to 100%, full 100% retrace or even lower. So when I see the 78 hold and separation almost back to the high, it tells me that we're going to extend quite a bit on silver. And I'd be looking at this level, the 92.395, as the long range, like the long range goal. And it's just important to have that. Doesn't mean it's going to happen, but it's just nice to know that that's there, that you in the back of your mind just know, okay, if this breaks in a direction and I'm wondering what's going to happen, I'm going to remember that 92.4 area. That's an area I'm going to remember, and then see if other things as we get closer start aligning with it. It's too far away right now to do any analysis without any price action over here, because you have no supply and demand zones up here. You're in price discovery. Obviously, we have the 100% level, so we can just draw it, see how price reacts as we get into it, and that's only $6 away, which seems like a lot, but it's not. So we also have some of these micro trends that we can draw fib levels on to see where they're aligned to. So if you see here, this is a micro trend. Micro trends are within the larger trends. Everything moves in trends, and basically legs and pullbacks, legs and pullbacks, legs and pullbacks. And what you'll start noticing is when you draw them correctly, you see they respect the fib levels. It's much harder to trade with fib levels on short term because you have to be very, very fast. You have to draw the trend. You have to draw the fib level. You can scalp it, see how it reacts, but you have to get out of trades quickly if it's wrong, because there's just too many fib levels. Like this could break down and go to this 50%. It's just harder, and I've tried scalping, and you just got to move fast, and you got to get in and out quickly. You cannot hold trades. So now that we've respected this 38.2% level on this micro trend, we can draw our extension at those exact levels. And as you can see here, we have 82.535, which aligns with our all-time high as our 100% move up here. So this is probably going to be where we're going to have a decent amount of resistance. And it aligns with other things, right? It aligns with all-time high, where we now have a supply zone. It aligns with our fib extension level right here. It aligns with the 78.6 level from this move here, and then it's a heavy supply and demand zone. So I'd be looking at 82.535. I would definitely short this all-time high retest. And then as for now, I would probably say that the only other thing that we can look at is whether or not we're retesting any key fib levels. Here, let me take a picture of this before I delete it. And again, the purple is where I want to take the trades. Purple is where I want to take the big heavy trade. Those are the good trades, really good trades. Everything that happens in between here, I'm not going heavy. These are more just levels for me to bounce off of and play off of and see if my indicators align with these key mathematical areas. That's the main piece. So let me take a photo and put this in chat so we know where the purples are. Okay, and then we'll look at one more thing. Okay, let's remove it. So now we want to look at downside strength. We want to look at downside strength. So first we have this high, we have this pullback. Are we holding any fib levels here? So we're holding the 78.6 on this fib level, right? See how price has been reacting to the fib levels? Nice bounce here off a fib, nice resistance here off a fib. This is the one time I've seen breakthrough. You don't normally see breakthroughs like this. So this tells me that this upside push is much stronger. When we see that a fib level just broke right through and then held on the next one. So yes, we're holding here. I would say if we break over this 80.6 area where we have this fib, I would be looking for a long. I'd be looking for a long over that level. You'll get at least back to 82.13 area where we'll see some sideways before we push back up to all-time high. But this is going to be the inflection point right now. We have, as you can see here, we have our breakaway price displacement right here, which aligns perfectly with this area. So we need to break through this. But I would be long through this level. So now where could you take a trade if your bias is long? Right now we have a bullish trend channel, which is a move up, pull back, creating a downward channel to basically be broken out of, right? So that's the purpose here with this channel, and we're already holding a ascending support into this channel. So I'd go long here. I think we're going to gap up, because anytime this happens, when market closes, when we rest on a trend line or a channel trend, we always gap up through it. So quote me on that. I think we're going to gap up or gap down, one or the other, but we're not going to, obviously not going to be in this area. So I would want to see if we gap out, which direction. And then I do like this area right here as support. Yeah, so this area here I like as support. So 79.115 would be an entry I would probably take up to the long side, because I don't see any other support levels here that would hold, minus this one right here. And then I would be long bias over 80.65. Right now we're at a retracement level, so this area right here is going to be confluence. It's going to be extremely important to watch. So we'll do NQ after this. So any questions? And I'm putting all of this, I'm trying to figure out a way to get this all on like a training manual, like a training book, where it's just very simple, but it has examples of these to look at and why we look at it. So that way I don't have to teach it all like over and over again, multi-confluence. So the main thing, again, multi-confluence is about different layers, not the same layers. That's the main thing. Just because, VWAP and your 9 and your 15 moving average all say the same thing, that's all just the same thing happening. It's literally just the same thing happening. So identify trend, that's layer 1. Identify fib levels, that's layer 2. Identify supply and demand, that's layer 3. Identify your indicators, your momentum indicators, that's layer 4. And then layer 5 is price action volume. And that is harder for a lot of people to detect. And it takes time, like how you just start seeing the candles react differently than it was for the entire trend, right? You start seeing candles that are ready to reverse. It's just something you start noticing over time, real time, while you're watching the candles. It's pretty cool, but and some of you probably are decently good at that. Like, hey, I'm noticing that these the main thing you want to look for is while you're watching the 1 minute candles. And tick charts work well too, because they show, or if even 15-second, smaller, because they show the strength of the buys as they come in, which is pretty cool, because once you get to these levels of divergence, and let's say you go to a tick chart or a 15-second chart, or even a 1 second chart, you'll start seeing random big orders just pop in these reversal areas that are basically reversing position covering at their levels. So 78,600. Let's go to the 1 minute. So this area right here looks good on the, yeah, so 78. I like this displacement area better because if you look at the one here on the 5 minute, we've already filled this. So larger time frame price displacements are always going to be stronger than 1 minute price displacements. So that's something that I've just noticed. I tend to not look for price displacement on the lower time frames. It's usually rarely on the 5 minute too. I like to do 30 minute, 1 hour, 4 hour, because those levels are, again, more market participants. Not everybody trades the 1 minute. And most professional traders, a lot of these institutions don't even look at the 1 minute. They take their positions on the 5 minute. They take their large positions on the 5 minute, and then their algorithms just kind of buy and sell as the market moves. But I like this level better. This is really good price displacement on the 5 minute. So 70, 77.9-ish area. All right, so let's go to NQ. Okay. All right, so again, let's start on the daily chart. See what we're looking like. So we held this. We had this here, but it didn't really respect it. So I'm not seeing any upside resistance as far as a downward trend goes, but I'm just seeing these layered resistance levels that are being created. So let's remove these for a second. So again, so now what we want to do is we just want to go from daily to 4 hours. And we're just looking. We're not trying to predict yet. We're just looking. The evidence will always present itself. You're just browsing until something stands out. That's it. You're just browsing. And there are obvious things that stand out. Like we're extremely close to this level right here, which has been one of our most dominant inflection points in this entire last 3 months or so. So this is a very good level. So 26,094, and we're not too far away from 150 points. So we'll leave that area there. Obviously, we have all-time high. Let's go back to the 1 minute. Hold on, sorry, my girl texted me. Okay. Sorry about that. Okay, so now we want to do the same things we were doing before. We want to look for our levels where we've created a trend, we've broken a trend, and we've held a retracement level to give us an idea of where the upside potential is and where, if so, does it align with another key layer. Main thing here. So we had this move up here to here. Decent, pretty trend, right? Move, bounce, peak, and then reverse. So now I'm going to start this as the bottom of our trend. I'm going to start this as the top of our trend. And we're going to see if we go from shorter time frames now, because this does not look good, but we're on the 4 hour. So if we go to shorter time frames, can we make our trend prettier based off of location to align better with our price movement? So the 1 hour. So if we go, so you see here now that we are, grab this side. Boom. Okay. So this tells me that this candle was not the start of the trend. It was this candle, it was the breakaway candle. So here's the breakaway candle. Let's draw it. See how it's held right here, held one time, held another time. So now we want to draw our extensions from these levels, right? It needs to respect my levels on a retracement perspective for it to have any sort of power from an extension perspective. Otherwise, it's not going to respect any levels. So our 78.6 extension lines up perfectly with this 26115 area, exactly, basically. So this area, again, is going to be a very important area for us to watch for, is 26120. I would honestly probably take a short, because here's the thing. Once we break out of this top, this area now right here becomes our new support, right? We're going to break out of this. This is going to be our new support. This is a 115 point range from here to here. We also have a retest of this breakdown trend right here, right in this area too. So that can add another bit of layered confluence if we get there, depending on the time. And then we want to watch, as we get closer to this level, we want to watch RSI or something, some sort of indicator, your moving averages, your crossovers, whatever it is. We want to watch for divergence, and then want to watch candlestick action as it gets into these key areas. Okay, so that is upside thesis. Upside thesis right now, based on the separation, first pullback, first true pullback, looks like we're going to break this high and we're going to continue up. That's what it looks like. Downside support, if we're looking at, okay, well, what if we do pull back a little bit more? Where can I take some trades? This move to this move, if this is the peak and this is not the peak, we would look for a retracement level aligning with some sort of support on a smaller time frame. So this area right here, where we have the 618, that area looks like a good area, but I do like this price displacement area right here, but it just doesn't align with anything. So I may not take this trade to the downside until we start creating some better levels. So at this point right now, we'll just be looking into the upside. Divergences on the 1 minute tend to be the best when it comes to prices in your area now, and now you look for reversal trades. So for example, I'll give you guys an example. So let's say we identified this area where we already have all of this, right? The key level here, support, supply zone. And we're starting to move up here. This is moving up here. But we can't really take trades like this because these are different days. Like this is the 30th, this is the 1st, this is the 2nd, this is the 3rd. Like by the time this is happening, we're not going to be staring at this for 5 days and watching whether it peaks, right? Because if you see here, we have heavy divergence. 1, 2. This whole pack right here on these peaks. This is full divergence, right? Literally every peak was weaker and weaker and weaker. This would have been a beautiful short because we have so much confluence here. A supply zone, a trend that's about that just broke, divergence, volume decrease more than likely as it pushed up. And then we haven't even done our fib, but this was a very good level. So to answer that, I would not do it on the 1 hour. I would not do it on the 30-minute. It just takes too long to watch for it. And RSI spends too much time at these areas. Sometimes it's up in these areas for 3 to 5 days. So, and then you're thinking that, oh, it's in this area, but it just hasn't made its move yet, so you can't really see it. 5 minute and 1 minute, with 1 minute really being your go-to. So if I go to the 1 minute, for example, on this breakdown, as we started moving up into this area, we have our 3 peaks. 1, 2, 3 peaks. Peaks are not peaks until they break a high. So that's one thing I want you to watch for. Don't get psyched out because it looks weaker at the peak or at the high. No, you've got to wait for it to break. When it breaks, that's when you want to see if buy volume is decreasing, not when it's at all-time high. Because when tops break, volume increases. That's the key indicator here, is volume. It has nothing to do with where the price is going. So what you want to see is when we have these 3 breaks, what does relative volume look like? And that's what these indicators are showing. So you can see here, we had a peak volume on this first swing. Second swing, that volume reduced. And then the final one, it stayed exactly the same, if not a little bit less than our previous peak right here. And so that gave us a good divergence for a reversal trade. This happens now between 10:40 and 12:20 over an hour's period of time. You know, or you could have done it on this one. I mean, you could have even shorted this one. 1, 2, 3, and then got 30 points to the downside. And then seeing on the next one that, oh wow, we're still diverging based off of these peaks. Like 1 minute's just much better. So yeah, exactly. So NQ again still looks bullish. We are going also into earnings, so keep that in mind. Upcoming tech earnings, and we usually see some more volatility in the Nasdaq when we are approaching tech earnings. So late January 2026, Microsoft is on January 28th, so we're about 2 weeks away, and Apple and Facebook are also at the end of the month. Looks like Apple is between January 29th and February 2nd, and then Facebook is around January 28th, and then Microsoft is also on January 28th. So remember, this is when people start making their bets on what's going to happen with earnings. And this is also where people start taking profits, or they start pushing price up because they anticipate a larger move and they want to get in, you know. So we are right now looking like we are setting up pretty well for Q1 earnings. Q4 earnings, which is also around the holiday season, which is when tech tends to have better earnings. And then Apple also just had one of the biggest phone launches, which is with its 17 and 17 Pros, with that new orange color and just the coolness of some of the features of it. I anticipate us continue up. So 26,100 may seem far, but it's not. So that's it for today. Just wanted to go over that with everybody. And then again, remember, it's the thought process is not should I take a trade? It's what's the evidence that I should take a trade? And guessing it does not give you any of that data, and guessing does not help with your mental. It doesn't help with your confidence. Once you start seeing data and the data starts telling you that something's making sense, that's the confidence where you make money. That's the confidence where you make money. It's like, but why wouldn't you? It's like this plus this plus this plus this equals this. Like, it's telling you that. And all you have to do is just wait for that trade. And keep in mind too, like, you can also, if you get to a point where you get really good, you can scalp into the trade. Like if we're only 30 points away from, hitting all-time high, we're probably going to hit all-time high. Like everything, the momentum's up. I'm going to take a scalp trade from the next support up to all-time high, 30 points, and then I'm going to take my reversal trade. Like there's ways to trade in between, but I wouldn't do that yet until you get good at identifying these levels and being confident that it's actually going to get there. And that's some of the times that's what I do when I just want to get into a trade is I'll look at my key levels and I'll look at where we're going and I'll say, no, we got to keep trading down. We have a key level coming up. So layer one is trend. Layer one is trend, and trend doesn't mean which direction the market's going. That's not what it means. Layer one is a trend that's been broken and is retesting an area. That's what we're looking for. Then in layer two, now that we've identified our trend, layer two, we've got to draw our mathematical levels, our Fibonacci levels. We got to draw those levels. We got to figure out, based on mathematics in this algorithmic market, where did they put the Fibonacci? And you can do that when you draw it from when you already see a pullback. You don't see a high break yet. You're trying to predict where price is going to go. You draw the start, the top, make sure it aligns perfectly with a level on the pullback, depending on where you can draw the start. The top, you already know where it is. Top is the top. That doesn't change. It's the start that you have to make sure that it's just on point with this bounce level. Then you draw your extension. Now that you have your extension levels, now you go into identifying your supply and demand and trying to align your supply and demand with your fib extension levels. That's layer three. Layer four is now the price moves into that level, and now you see divergence on your momentum indicators. Your momentum indicators are there to give you a signal of divergence. The price is moving up or to extremes, but momentum is dying. And that's your fourth one. Then fifth, again, is volume and candlesticks, where, for volume, for example, what does that mean? Is we get to that level and we've just got huge, like the candle is just so big that you can even get in without having a limit order by 20 points, right? Vague volume, saying everybody was waiting for this area and the only way to get in was to know that this was the area and put a limit order. Like that is what you look for from a volume perspective in these areas, not everywhere. It doesn't matter everywhere. It matters in these areas. And then candlesticks, again, is watching how the candles react differently at these levels based on how they were reacting before. Before, every sell candle was getting bought up, turning into hammers, big squeeze bars to break out of these micro support and support levels and trends and resistance levels. Then all of a sudden we get into this, we see divergence, and then now all of a sudden we're seeing our big buy bars getting sold into. We're seeing big upside wicks as we break levels. We're seeing more solid red candles than we are seeing green candles. Green candles are all wicks. Red candles are all solid red candles. These are the things that you start looking for, from that level. And then, so right now it's practice the first three confluences. First three are the most simple. Trend, identify the trend, identify the fib, identify the supply and demand, price displacement, supply and demand. Supply and demand really, there's a lot of things that fall into it because there's key levels that are just very wicky, right? Those are key levels. There's key levels that are price displacement levels. There's key levels that are channels or patterns where we're breaking out of the support or resistance channel of it. So supply and demand areas there's multiple ways to identify it. The more you can stack up, the better. But practice those three first. Trend, fib, supply and demand. And then I'll do your best to align all three. If you only see one, don't even look at it anymore. Don't even look at it anymore. Say, nope, there's only one here. I'm not looking at it. Get used to that. But remember, your fib levels, what's gonna matter is where you draw your extension levels, and that's gonna be based off having the right fib retracement levels. If it doesn't respect the fib level on the pullback, then why would it respect the extension when we draw it? It won't. It's not gonna happen. So you have to make sure that the retracement is the successful retracement level is the precursor to a successful extension level. That's it. That's it. Otherwise, you're going to have too much drawdown, and you're not going to have bulletproof trades, and you're not going to feel confident. Promise you. So cool. So that's it. We got an hour and 15 minutes. We'll see what happens when the market opens. But otherwise, man, thanks for popping in, and see y'all in the Corvus chat. If you're not in the Corvus chat yet, ping me. We'll get you added in. It's just where we all hang out and talk about stuff and post charts. So